Yesterday, communication services outperformed, boosted by Meta. After that layoff news, we also saw increased inflows into index funds for the S&P and the QQQ NASDAQ 100. What does that mean?
Well, I think the reaction yesterday had a lot to do with the inflation numbers and what the Fed might do as a result of what's been happening both with inflation and with the banking system. And we understand that growth stocks do better when interest rates come down. There's an inverse relationship between price earnings multiple and what happens with interest because of the discount rate. You want to pay less for a dollar 3 years from now if interest rates are higher. But the signal, I think, is that if inflation is coming down, or at least it wasn't higher than the whisper numbers, it was basically in line. And we know that with bank failures, I mean, what happened last week or over the weekend with Silicon Valley Bank and Signature really puts a lid on what the Fed can do in raising rates. They're unlikely. I mean, there's almost no chance they're going to go to 50 basis points. It's much more likely that it'll be 25 basis points and a pretty good chance, I guess, also that there might be no increase and then one after that. And that would be good for growth stocks. So I think that the market, it was a relief, and that really helped the entire group.
All right. So I know you're big on bank stocks. So new this morning, Credit Suisse actually upgraded Charles Schwab, saying the stock has overshot to the downside in the SVB fallout. You also made a bank purchase. Explain the rationale behind your bank purchase.
So we bought some First Republic Bank yesterday, and this is a stock that we've known well, and we did a lot of work on over the weekend on it. It has been one of the most respected banks in terms of customer satisfaction. About half of its loans are mortgages. Most of those mortgages have some tie to a deposit. People don't move their money when there's a mortgage involved. You can't really move your mortgage, and therefore those deposits we think are going to be steady. Now, of course, they'll lose assets because every bank, except for maybe the top four, are losing assets right now to the bigger banks. But that's a fear factor, and we feel that it's a solid bank with definitely now with the infusion and the potential for more assets from J.P. Morgan and from the federal government. I mean, the government has made that clear. The book value was $80 a share before this. The book value, we assume can come down, but the stock was trading at 19 on Monday morning. And we bought the stock above that level, but not much. And we feel very confident that this is a bank that will stay in business. It has great customer service. And once the country calms down, we're going to see that these banks are very important for the whole banking system. The government does not want more banks to fail. Okay.
I want to get to your picks. I mentioned Meta earlier. That's one of your picks along with Salesforce. Give us a sense of why you're so bullish on those two names.
Well, for years, we saw those companies expand their employee base, expand the scope of all of their operations, and even in an aspirational sense at Meta, away from their core business. This has been a year of reckoning over the past really 16 to 18 months, where these big tech stocks saw that investors were disenchanted with their style of growth and their approach toward unprofitable segments of their operation. And they've gotten both religion in terms of cost-cutting and streamlining, but also activists involved. That's going to improve their margins. It will increase earnings. Their base businesses are strong both. They've been in, I would say, recessions that are specific, and we think that's good for the companies going forward.